Welcome back guys on another YouTube video. Now in today's video we're gonna be talking or explaining about position sizing on lot sizes. Now without wasting time, I think hit that like button, subscribe and share this video, plus commenting down in the description about videos you'd like us to make in the future. Now without wasting time, I think do subscribe in the link in the description. Sign up with our Forex broker, which is the Phoenix Capital. Is the broker we recommend you, plus joining our free Telegram group channel where we try to explain or share the knowledge with our community, plus giving out signals on a daily basis. Now hit the links in the descriptions. Also follow us on our social media platforms. All the links are down there in the description. Now without wasting time, let's head to the notes and see what we have for you today. Now in today's lesson or topic, this is about position sizing and lot sizes. Spot forex is traded in lots. Now when we are trading the forex market, we trade these currency pairs in lot sizes. The standard size for a lot is $100,000. Now when you look at the lot size, the standard lot size starts from 100,000 K account. There is also a mini lot size, and that is a 10K account. So if you have a 10,000 US dollar account, that means you must be using a mini lot. A mini lot is lower than a lot size. Now a standard lot is 1. Let me first get here my calculator. A standard lot size is 1. But the mini lot size, that is 0.10 lots. So this is our mini lot size. But the standard lot size is 1. So if you're having 10,000 US dollars, that means per trade which you're going to be placing at a moment, you'll be able to use 0.10 lots, between ranging 0.10 lots to 1 lot. I think we are together. For 100,000, you have been advised to use 1 lot and above. So that's the meaning. As you already know, currencies are measured in pips. I think pips, we explained it in our previous videos. So go to our YouTube channel, which is called Forex Daves or FX Daves, and you watch our previous video where we were talking about pips, explaining more about pips or pip value, all that stuff. Now currencies are measured in pips, which is the smallest increment of that currency. Remember, when currency pairs are moving, they move in pips. Every small increment or movement in the market, which is the volatility, it is measured in pips. To take advantage of these tiny increments, you need to trade large amounts of particular currency in order to see any significant profit or loss. So now that you know how to calculate the people value, or that was talked in the previous video, let's look at how you can calculate profit or loss. Now in this particular video, I want to show you how to calculate lot sizes, and I will show you how to calculate loss or profit of a particular trade which you have been trading. Now for example, we have a pair of USD stroke Swiss franc. Now if the rate you are quoted is 1.4525 stroke 1.4530, because you are buying the US, which is the US dollar, you will be working on the 1.4530, the rate at which traders are prepared to sell. Now, remember, when other traders are preparing to sell, that means for you at that particular moment you're preparing to buy. You're selling off your Swiss franc, preparing to buy the US dollar. So you buy one lot of 100,000 at 1.4530. A few hours the price moves to 1.4550. You decide to close your trade. I don't know whether we're together. Now the difference between 1.530 to 1.550, those are our pips. It's what we're going to try to explain. Now we're going to get 1.4530 minus the movement this currency pair has moved is 1.45550. Now our answer is 0.002. So these are 20 pips. This currency pair has moved from the current market price of 1.4530 to 1.4450. So these are 20 pips. Now using our formula from before, we now have 0.0001 divided by 1.4550. Now after calculating our pips, remember we are trading the currency pair where US dollar is indicated. So remember in our previous video we said the pair where US dollar is indicated, it stands for 4 decimal places. Now we are going to get our calculation of 4 decimal places, which is 0.12341. We divide it by this exchange rate of 1.450. Now times the lot size we used, which is what the 100,000 times 100,000. So now this equals to 0.6, which is approximate to $6. Now $6, this is the pip value of this particular currency per pip. Now remember we calculated and our answer was 20 pips, which was 0.0020. So now we're going to get this 20 pips times the $6. $6 times our 20 pips. So that is $120, which we made in the difference of 20 pips, because the price of our currency pair moved from 1.4330 heading to 1.4550. Now the difference between these exchange rates was 20 pips. Now when you get the 20 pips, divide it by the exchange rate where we sold from, which is 1.144550. You get it? Then we multiplied, we got our pip value, which was $6 per pip. Now times the 20 pips, which we captured all the way from this exchange rate to the other. Now in this video shortly we were trying to explain about what's lot size, how can you try to calculate your loss and profits, how can you calculate the amount of pips being gained by you placing a trade, plus multiplying it by the lot size you have used. Now, not wasting time, I think let us end our video. Don't forget to like and subscribe, plus sharing this video, plus hitting the links in the description. Follow us on our social media platforms, plus joining our free telegram channel. The channel is free for sharing ideas. We share with you ideas on a daily basis, plus giving out signals. Without forgetting, the main issue is you signing up with our reliable Forex broker, which is Infinox Capital. So start your trading journey with Infinox Capital. Also, the link is down in the description.